Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
$14.90 WGCH. This is Carrie Lutz. You're listening to the Financial Survival Network. If you're wondering whether the rapid advance of gold and silver over the past week has staying power, if you're wondering if it's too late to get in and to reap profits, well, Main Street for Wall Street has a viewpoint. Here representing that viewpoint is Jason Burack. Jason, welcome back.
Thanks, Carrie. Glad to be back.
Great to have you. So we're seeing a bit of a rally, huh? We went up quite a bit over the past week, right?
Well, I would say this is just a continuation of a long-term secular bull market. So, the mainstream media, when gold and silver had those enormous sell-offs, silver especially last year in 2011 when it just got crushed a couple times, but gold, towards the end of the year where it had a profit-taking and a normal type correction, and the mainstream media was like, oh no, this is the end, and there was just like a more than a 20% correction for silver, and there was all these news stories out that like the bull market in silver's over, it's an industrial metal, it has no monetary component, blah 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 blah, and this is obviously proving things wrong here, and the real supply-demand fundamentals for silver are going to be found. Sprott came in with a large order buying. I'm not sure exactly how much he's bought already of the new secondary offering for PSLV, but it's definitely, put a floor into the silver market around like the $28, $30 level. And, I don't think we're going to see even $25 an ounce silver maybe ever again. We might see it touch there maybe briefly if there was a massive market off, but I think we're going to see silver definitely test $50 an ounce sometime in 2012.
Yeah, and ditto for gold. We're going to see it probably break that 2,000 mark, and when it does happen, it's going to happen so quick, so fast, and without warning that the so-called experts that you see on that station, I think it's called CNBC, ever hear that one? They're going to be just flummoxed because to them, with the exception of Santilli and a couple of other people that make it on there, they are so clueless about metals, commodities, that it's really painful to watch them,
Yeah, I think they're so worried about, intraday market movements that they miss the whole big picture and why people need to have a core portfolio exposure to physical metal, physical bullion and or, gold and silver stocks in the first place. So in terms of price targets for gold, I think it's a possibility we could see $2,500 an ounce gold sometime in 2012, but I really, because of the volatility in the paper prices and the fact that they can change, the rules with the margin increases and stuff like that, I don't think on the first try, I don't think gold would stay at $2,500 an ounce. I think we could see a pretty violent correction, perhaps down to, back down to 1950 or something like that before it builds a base and starts moving higher. I think that's a possibility. I know other people have, price targets of like, $2,200, $2,300 an ounce. Think that there's a lot of rationality to that too. But, when the trend traders come in, and we were discussing this before, started recording this in your interview, when the trend traders come in, when those large pools of capital come in, they almost always push the trend higher than, rational expectations expect it to in the near term. And then you have the sell-off after, the trend gets pushed higher.
And that's exactly what we saw last summer. The price looked like it was going to break 2,000. It definitely got overbought. And when any market is overbought, it's susceptible to the least bit of push from whomever. And then it goes, it's like that ball, you roll it up the hill and then it slips and it just rolls right back down the hill. And hopefully it gets caught before it gets back to the bottom. And then the whole process starts again. And I think that was a Greek mythology analogy that I just gave, but you know what I mean. It's just an up down, and you just can't be deceived by those momentary and those short-term gyrations, right?
Exactly. And if silver tomorrow and as good a great a day as gold and silver are having today and yesterday after that intraday move yesterday, that monstrous intraday move, and a great day today, if they were to sell off tomorrow, silver were to drop down $1.50 or $2, it would be a buying opportunity for those that missed the move in the last few days. You have some cash on the sideline, definitely go look and monitor the situation for your favorite gold or silver miner. This is why you have a stock watch list. And, you go in there and you wait for a dip, and you won't miss the whole move. But a lot of these traders, what the problem with a lot of these traders is they just don't care about the long-term fundamentals of what's happening to the U.S. economy or the gold and silver market, and they don't care about the reason why people are buying gold and silver. So I think there will be some profit taking in gold and silver because of the large moves that have already occurred from some of the traders that got in on the dips.
Yeah, no doubt. I mean, what you're saying is true. And the people on CNBC don't care, or they don't care enough to become informed. When you see the employment numbers come out, it's this mutual, they're ecstatic. They don't ever look behind those employment numbers to see how rigged and how phony they are. They take everything on CNBC and other major channels there as if it were the truth, and they never look behind for the underlying causes. And that's a real disturbing thing to me. But
I completely agree with you, and I think this is the problem with the Keynesian economic theory is about the animal spirits, is that they don't want the whole Keynesian economic theory doesn't want to tell people the truth. They don't want to worry about consumer confidence. They don't want that because they're worried it'll stop consumer spending. But if you tell people the truth, people can make a plan, people can adjust, people will be more prepared for what is to come. And that is what's missing in the mainstream media, like you said.
Yeah, it's just pure deception. And just a funny anecdote for you. A guest that I have on the show told me 2.5, 3 months ago when silver, what was the low point at silver?
It got around 28. It might have dipped to 27 very briefly for a short amount of time.
You couldn't really buy it at that price, right? I mean, there was the premiums went up because the dealers were out of pocket. So the real price never went down that low. He sold a car, an extra car that he had, and he just bought silver like it was going out of style. And now $7 later, he's looking pretty smart. So I was suggesting that he should just auction, when his wife's not around, just auction off the furniture in the living room, sell everything off, go rent some furniture, and then buy the silver. And then when it goes up again, sell it and buy your furniture back. But I don't think his wife went for that one.
Haha. Well, I can't fully endorse that, but if people have a financial plan where they have money coming in from a job and they have a certain amount of cash lying around and they feel they could take that additional risk on, I know David McIlvaney, and David McIlvaney sold his house in California towards the top of the real estate market, and then he bought a smaller house in Colorado, and then he mortgaged that thing and bought physical silver on the dip on that. So he bought extra precious metals from selling his house out near the top of the real estate bubble, and then he mortgaged his house again and bought more precious metals. So this is something it's outside the box thinking. It's very contrarian. This is not something everyone should go out and do, though.
Yeah, definitely not. I mean, leverage is dangerous, especially with silver. You have to be, one of the things I told people that I think is a good idea is you got to hire interest mortgage, or even if you can refinance your house and get an interest only arm for 5 years, and whatever you save, you every month diligently put into metals. At the end of 5 years, when that thing adjusts and whatever is going to happen to the economy, the world, is going to happen within the next 5 years. That I am absolutely convinced of. But if you were putting away $500 a month into metals, and you do that for 60 months, you got $30,000, and it could be worth many times that. A definite possibility, assuming, of course, you can meet the debt service on your home. And if you can't, then you should be thinking about how to get out of it and possible defaults or whatever else.
Exactly, and that's like some contrarian outside the box thinking there for extra ways to use kind of the system that has been put in place to take advantage of. There's also very low interest rate now, long-term mortgages. So I think they're below around 4% now. So you can, refinance your house that way if your interest payments are too high, and you can give yourself more cash flow. Instead of your mortgage payment, you can use that excess cash flow to buy, more precious metals or more mining stocks too. So I think the mining stocks, people should look also, they should have a balanced portfolio where they have their precious metal exposure for physical bullion exposure for insurance and wealth preservation. And then they also, add those mining stocks because the dividends, the free cash flow, and the profit margins are just expanding very rapidly. I think those are going to pay very, very big dividends in the next, 3 to 5 years.
Yeah, my last person I had on was telling you, you're going to see dividend plays in these mining stocks. And one of the things that I like best about them implementing aggressive dividends, not this 1% or 0.25%, because I just don't see that as that meaningful. It's a start, yes, but when they get up to a couple, 3, 4, 5%, it cuts the legs out from the short sellers because the short seller has to pay the dividend out of pocket. There's no other way they can do it.
Exactly.
That will cause those stocks to fly. And
share buybacks.
Yeah.
You combine the dividends as a management team, you combine those dividends with share buybacks too, and the shorts are done.
Exactly. But they just seem very hesitant. Even the big guys, the Buracks, the Gold Corps, they don't have a real aggressive dividend strategy in place. It's kind of a shame,
Well, to counter that, there are a couple companies that do have aggressive dividends for your listeners out there. Newmont, Silver Wheaton, and Goro, the Gold Resource Corporation. Goro has a joint venture. They're in production now. And, they have a very aggressive dividend payouts monthly. And I think they're even going to look now into paying physical bullion as a dividend. So that's something your listeners should definitely do more due diligence on.
So what was the name of that stock again? Could you just spell it?
Goro, Gold Resource Corporation, symbol
okay, sure.
Symbol GORO.
GORO. And of course, I don't own any. You probably own some, but we don't make any recommendations. It's just something worth looking at because income. These guys are going to be putting out so much money. You look at a company like First Majestic. Their recovery cost is $5 an ounce, $35. That's a $30 gross margin per ounce. That is a huge profit for a resource-based company, and it's time to start sharing that with the shareholders. That's my personal opinion. It'll work for everyone's benefit.
Exactly, and especially if the management team can balance that with some good organic growth. So, they're growing production, they're growing reserves, and then they're also returning, dividends to the shareholders as well.
Absolutely. So, Jason, where do we find you on the internet, and email address, please?
They can find me at my main website at wallstreetformainstreet.com. That's WALLSTFORMAINST.com. And they can email me if they're interested in any in-person consulting work around the DC metro area or any of our online products or services at wallstreetformainstreet@gmail.com.
All right. Excellent. Hey, been a pleasure having you on as always. We'll talk to you in a month or so.
Thanks.
Be well.